Thank you very much for that wonderful introduction. Yeah, I think I'm a bit of a heavyweight. I think that's for sure. So today's presentation, we are going to touch about the tariff wars. I'm sure today's presenters have given us a very, very good understanding and a very good overview on what's happening in the world right now. So the title of today's presentation for me will be The Art of the Deal versus the Art of the War. Okay, so I'm sure you know who this guy is. So I'm sure all of you are well aware that we have a problem. Okay, the world has a problem. Or maybe let me put it this way. I think he has a problem with the world. Okay, so I think that's probably the biggest issue that is facing the market right now. Okay, so I'm sure on this picture you can see this is the start of Liberation Day, 2nd of April 2025. To me, that marks a turning point in not just financial history, but also political history. Okay, there's a before Liberation Day and there's an after Liberation Day. And if you notice, right, the word Liberation Day means, in the eyes of the Americans, right, in the eyes of Trump, he is liberating US from us. So US is the victims, we are the aggressors, people in ASEAN, people in Malaysia, the poor penguins in Australia, there's nothing to do with him, but he's tariffing them, right? So we have a problem, okay? And art of war versus the art of the deal. So Trump thinks of himself, he thinks he is the master negotiator. And he wrote the book, Art of the Deal. And on the other side of the table is China, right? Xi Jinping, hopefully using Sun Tzu Bing Fa, and trying to deal with him. Right? So I do think that makes for a very interesting dynamics in geopolitics right now. So today we're going to explore this dynamic and how it affects all the different markets, financial markets in the world, and more importantly, how does it affect us, and how do we try to make money during these volatile times. Okay, let's look at the macro picture. Okay, macro picture. Look at the equity markets. So this is the year-to-date performance of equity markets in the world. So I've highlighted China. China is up roughly about 17%. China is up 17%. And US is up only roughly about 6%. Like what Kevin was mentioning earlier, ASEAN is actually doing quite poorly. ASEAN is doing roughly about 6%. That's poor. So US and ASEAN are probably doing about the same year to date. And that's surprising because Liberation Day was supposed to make America great again. But the whole world is saying, I don't like it. I don't like what Trump is doing. So that's why if you look at the equity markets in China, up 17, Europe is up 20, but US is only up roughly about 6. So the equity markets have spoken. I like China over the US. Moving on. Let's talk about the bond world, right? The bond world, right? Typically, in times of trouble, usually people will buy bonds, right? Because bond is supposedly safer, right? So when people buy bonds, bond use actually goes down. Bond use go down because people buy bonds because people are scared, right? Bond use goes down. Price of bonds actually goes up. But in this case, right, after Liberation Day, bond use actually went up. So people are actually selling US Treasury, US bonds, right, after Liberation Day was announced. So what does that mean? The bond market is also saying the same thing. I don't like it. I don't like what Trump is doing. So the bond market, right, the US bond market is actually being soaked down after Liberation Day. Okay, despite the fact that, once again, in Trump's mind, he's saying, what I'm doing is great for America, make America great again. But the bond market is saying, no, I don't like it. And we move on to the other big markets here. It's the foreign exchange market, the currency market. So what is the currency market saying? Currency market, after the Liberation Day, once again, currency market actually, for the US dollar actually weakens. US dollar actually weakens. Across the board, you can see it in your ringgit. You can see it in Sing dollar, Korean won, Taiwan dollar. Almost across all the major currency, US actually weakens. So even for the currency market, they're saying the same thing. I don't like it. I don't like what Trump is doing, so I'm selling down US dollar. So once again, now going back, people don't like US equities after Liberation Day. People are selling down on US treasuries, and people are selling down on US dollar. So where does that leave us? How can we make money off that? If US dollar is weakening, people don't like US assets. So I show you this chart. Very colorful chart, but I just want to concentrate on the red line first, okay? Concentrate on the red line first. The red line is the US dollar. So every time the US dollar or the red line goes up means US dollar is strengthening. Every time the red line goes down means US dollar is weakening, okay? Then we look at the green line. The green line is actually Asian markets. Same thing, green line goes up means Asian market is going up. Green line goes down means Asian market is going down. But if you look at this chart, right, across time, every time the red line goes down, green line goes up. Every time the green line goes down, rather the red line goes down, green line goes up. So every time the US dollar weakens, Asian equity market actually does very well, right? So if you follow what I'm trying to say in the first part, I do think that the world is saying, I don't like what the US is doing. I'm going to sell down treasuries, I'm going to sell down US dollar. So therefore, I think Asian equities and therefore China market will tend to do quite well because money will flow out from US dollar, from US treasury to our parts of the world. Okay, next. From the US tariff war, right, we also need to analyze, right, who will suffer more? Because you know, right, what Trump is saying is this, right, who's going to pay the tariff? Is it the Americans? From US point of view? From Trump point of view, he says no. Trump is saying Americans are not paying the tariff. It's people like you and me and the rest of the world who's going to pay America the tariff, right? So the tariff won't touch them. But is it really the case? Because you have on this slide here headlines from CBS saying Walmart and Target CEOs, right? These are major supermarket chains in the US saying that the shelves will be empty if you carry on this tariff war. But if you look at what Trump is telling the Walmart CEOs is, you eat the tariff, you makan the tariff, right? Because prices are going to go up in the US, because you and I know, right? The tariff will be paid for by the Americans, right? So they will have to eat the tariff. Prices will go up, and this is from headlines. Next, on this slide here, so let's see what the US Federal Reserve, this is not my chart, this is from the US Federal Reserve, US San Francisco Federal Reserve, they are saying the same thing. This is their paper. They are saying for every 25% increase in tariff, investment goods will go up by roughly about 10%. Consumer goods will go up roughly about 2%. Right? So even the Federal Reserve in the US are saying inflation will come for the US. Okay? Next, let's move on the other side, of the table. What about China? Because the tariff is on China, right? But if you look at the news headlines, right, in actual fact, China is not doing anything much, right? China's not doing anything much. You don't hear too much news on China, what China is doing. So why is it so? Why is it that China is so cool, so calm, and life goes on? My interpretation of this is, you can look at this chart here. This chart, very simply, is just saying, share of US exports, right, as a percentage of the country's total GDP in the year 2024. So for China, it's only 2.5%. Meaning, what does it mean, this 2.5%? Meaning, if tomorrow, for the next 1 year, no US exports from China to the US is allowed. No more exports is allowed. What is the impact on China's GDP? The answer is, it's only 2.5. It's only 2.5. So if you are China's senior leadership, Xi Jinping, you probably look at this 2.5 and say, okay lah, I can tahan this. And also more importantly, right, this 2.5% is already after Trump 1.0, after Biden, and now Trump 2.0. It has been 8 years. This is not new. So if you are a tauke or tycoon with manufacturing facilities in China, if you want to move out of China to go to Malaysia, to go to Thailand, go to Vietnam, you would have done so already over the past 8 years. So if your factory is still in China, it probably means that you can't move because the whole ecosystem, the whole kampong is all in China. You can't just move your factory out. So you're probably stuck, right? So I think that's why the Chinese government or Chinese senior leadership is very cool, because even you move everything out, I don't really care, because it's only 2.5 percentage points hit to my big economy, and I can tahan. And the other thing, he is also very confident of the strength of China, because he knows, right, you probably can't move much. This 2.5% is whatever is left after 8 years of US-China tensions. Okay? Next. Then, we all know, Trump is asking the world to choose. Choose between who? US or China? You choose. So in my mind, it's like a primary school, it's like a kindergarten, when we're in kindergarten, right? You can only have one best friend, right? Right? He asks you to choose either you or me, only one of us can accompany you for recess, right? You can only have one best friend. But this is what Trump is thinking. But it was in the year 2000, right? In the year 2000, okay, this is the chart here, the year 2000. This is the map of the world, all right? For every country in the world, if US is a larger trading partner than China, then the country will appear in blue, okay? So in the year 2000, right, most countries in the world is more dependent on the US compared to China, okay? So more countries in the world is in blue, right, mainly blue. But if you just fast forward 24 years, the picture is very different. So for most countries in the world right now, right, China is a bigger trading partner than the US. So if you go back to my kindergarten story, right, which one will choose China as the best friend? Probably because China is giving them more candies, right? So I will have recess with you. Because you give me more candies, I'm dependent on you. So the question, right, on who is more important, whether be it China or US, if you ask that question to all the world leaders, right, Trump may not like the answer, honestly speaking. Okay? Let's move forward again. I think this part is the most important part, which I think a lot of people are not talking about it. It's the soft power loss. It's the soft power that US have lost because of Liberation Day. Because prior to Liberation Day, everybody was thinking, it's going to be US versus China, correct? But now, after Liberation Day, we know it's US versus the rest of the world. You and me, everybody, right? So, and worst part is, he's also targeting his friends. Headlines, NBC suggests, Trump is suggesting that he's going to use military force to acquire Panama Canal in Mexico and take over Greenland, which obviously belongs to Europe, Denmark, and also trying to use economic force to annex Canada. Bear in mind, all these are his closest friends. Mexico, Canada, and Europe, and yet he's targeting them. And I just want to showcase these headlines from Reuters. Very recent headlines only. It's from 19th of May. It's China who has going to placate Denmark and say that, look, we, China, respect your sovereignty over Greenland, right? Because of all these aggressions that Trump is making on Greenland, right? So this is, for me, is the biggest irony. So once again, I think the soft power loss is more important because, right, Trump, within a few weeks, have lost the trust of the world that has been built up over decades, right? And once trust is lost, it's very, very difficult to build it up again. Because your best friend, right, your best friend in school, or best friend in kindergarten that you go recess with, all these years, right, is now turning against you. It's asking you for protection money, right? So this is, to me, is the longer impact that the world will have to contend with for the foreseeable future. Next. On this chart, this slide here, very, very important picture. So this is the foreign ministers of South Korea, Japan, and China shaking hands and saying that they will promote regional trade because of Trump's tariff, right? I think the irony is, once again, right, it takes Trump to unite Asia. Because I'm sure all of us are well aware of the historical baggage between Korea and China and Japan and China, right? But because of Trump, they have to band together. They have to band together to resist Trump. So that's why, once again, right, going back to my earlier point, the power shifts, right? China is gaining because of Trump, and US is losing. Next, their traditional allies, once again, even EU is saying, I will make a trip down to China. I will try to mend fences with China, right? And also, China is not just sitting on its hands and not doing anything. They are also making active efforts to win friends, right? So that's why he came down to our parts of the world, to Malaysia, to Vietnam, and Cambodia, right? A whole host of trade blocks, of trade deals were signed. So China, once again, is trying to influence and trying to buy friends, right? And ASEAN and China are obviously drawing closer together and away from the US. Next. And because of Trump, I'm sure you have seen this news, right? Harvard University, right? They are banning international students from Harvard University. And I think that's silly, right? It's against the whole world, right? And these are students from all over the world. They're now no longer allowed to study in Harvard because of Trump, right? So once again, soft power erosion. That will have implication over the next few decades. So what are the key themes that we can play? Since US is not being a good friend, US doesn't want us to be friends with them, doesn't want to do business. So how? Where can the money go? So in my opinion, China. This slide here, once again, headlines, is saying China shifts monetary policy for the first time since 2011. For the first time in 14 years, China is shifting its monetary policy, right? First time. Meaning that they're trying to stimulate the economy. And it just started only, we're just months into this. So for me, there's a lot of chance to make money because this is the first time in 14 years, since 2011, that they are trying to stimulate the economy in such a massive way. So let's take advantage of this. And moving on, I also want to talk a bit about DeepSeek because I do think that DeepSeek is a very, very important event, right? Once again, headlines from CNN, DeepSeek, or the emergence of DeepSeek sends US stocks plunging. Even Goldman Sachs is saying because of DeepSeek, right, there'll be $200 billion flowing into China. Why is it so? Once again, what is DeepSeek? So DeepSeek is a Chinese upstart AI. So when DeepSeek came out, it was super surprising for the Americans. So when DeepSeek came out, it was as good as OpenAI. And in fact, people are saying it was far, far cheaper because during the last run, it's only 5 to 6 million for the last run, right? But more importantly, right, for the rest of the world, what is the significance of DeepSeek? DeepSeek is given to the world, you, me, everybody in the world for free. Free. So we can possibly have AI on our phone, on our laptop for free. OpenAI spent billions and billions of dollars. So that's why when they want to use OpenAI, chat or LLM, you have to pay because they burn tens of billions of dollars. But for DeepSeek, right, they develop it for 5-6 million. So if you develop something so cheaply, you can obviously give it to them for free. And I also think that it's the other way, is also thinking they are also smashing the US technology market. Because once I give it to you for free, OpenAI is in trouble. All the tens of billions that they have burned, they cannot sell it anymore. Because on the other side, you cannot beat free, right? So that's why I think DeepSeek is very, very significant. And more importantly, because DeepSeek is China grown, that's why the Chinese technology ecosystem is embracing DeepSeek. So we have, once again, headlines, chip makers, cloud providers, internet giants, everybody is embracing DeepSeek. To me, that's a big step up for the entire ecosystem because, once again, right, it's free. You have AI for free. Nothing beats free, right? So in the Western world, they are still charging, but in the China ecosystem, it's free. So that's why I think DeepSeek is very important. And also more importantly, right, if you were to rewind back the clock, as of December of last year, if you were to ask me, who are the winners of AI? I'm sure all of you have said, oh, probably US, because you have OpenAI, you have Meta, you have Google, and more importantly, you have NVIDIA. Of course, they will win, right? So as of last year, that was the common thinking for investors. That's why we have the likes of Mac 7 doing so well, all the US technology stocks doing so well. Because the answer to that question, who is going to win the AI war, points to the US. But with DeepSeek, that mirage, that questions, The answer is wrong, because what we can say is the battle for AI leadership is just starting only. You cannot say that US is winning because we have DeepSeek. And more importantly, DeepSeek, right? We know because of US-China tension, the US have tied the arms, they have tied the legs of Chinese technology company in terms of tech restriction, and yet they can come up with DeepSeek. How is it possible? The reason is because without the brute strength of semiconductors, they are smarter. They can use better algorithm, better use of software, better use of computing resources, right? Because you can't keep them down. So that's why, to me, DeepSeek is a very, very important, a watershed event for the Chinese IT ecosystem. Next, more importantly, right? More importantly, the impact on DeepSeek to the rest of the IT and the tech sector. So the senior leadership of China is also very smart. They realize how important and how significant DeepSeek is. So straight away, 2-3 weeks after DeepSeek was announced, he invited all the technology bosses to come together for a major meeting in February of 2025, just a few months back. And on this picture here, you have Xi Jinping shaking hands with who? Jack Ma, Alibaba Jack Ma. So this is supposedly the first time, right? Xi Jinping and Jack Ma are shaking hands since 2020. So for those of you who still have that impression that, oh, you know what, Xi Jinping or China leadership is trying to pull down or try to control the China internet sector, you need to change that mindset, because even Jack Ma, right, from Baba. So we used to call Baba black sheep, right? But now Baba is no longer the black sheep, because Xi Jinping is shaking Baba's hand, or rather Jack Ma's hand. So he's in from the cold, right? And the guy who's shaking Xi Jinping's hand is the founder of DeepSeek. So from our perspective as investors, it's important for us to understand. So who are the big bosses of Chinese internet sectors who were invited to these major meetings? And we have the list right here. We have Jack Ma from Baba, from Huawei, obviously, Tencent, Meituan, Xiaomi, BYD, CATL, Wilsemi, Unitree, and obviously DeepSeek. So Chinese senior leadership is already signaling, I will support the Chinese internet sector. I will support the Chinese tech sector, because I need them to fly the flag. Only the tech sector in China can beat the US tech sector. Okay? And moving on, the other segment that I like a lot is obviously the electric vehicle segment. So right now, China dominates the electric vehicle segments. Right now, 2/3 of all electric vehicle sales in the world happens in China. 2/3 of all electric vehicle sales in the world happens in China. And also more importantly, 70% of all electric vehicle production actually happens in China. 70%, right? So I'm sure we have seen more and more electric vehicles on the road, and more importantly, a lot of these electric vehicles are from China brands. So I think that's significant. And I think China likes electric vehicle ecosystem is because they are self-sufficient. They are self-reliant. They don't need to depend on the Americans or the Western technology. They are self-sufficient. So that's why money will be poured into this sector, and the Chinese government will support the electric vehicle sector. So last but not least, I just want to very, very quickly talk about the tariff war in terms of the tariff rate. I think Kelvin in the previous presentation has presented something of this sort as well. I just want to explain how we interpret it. So this data just came out a few weeks ago. Okay? So what is significant for us is this. Trump actually gave us more or less a framework of how he viewed the world, and depending on who you are, what is the tariff rate. So Kevin was right. This, to me, is the kawan price already. Kawan price. If you are kawan with him, you are friends with him, you are allies with him, you get cheap sale. 20 to 25 tariff. But for small island like Singapore, right? Singapore, we get 10%. And the worst part is we actually import more from US than we export to them, because Singapore don't actually manufacture anything, right? And yet, we have to pay 10% just because we share this earth with Trump, right? So, the range we know, roughly about 25% is for friends, But if he doesn't like you, like a Brazil, you get whacked with 50%. Then the rest of you can just anywhere between 30 to 40% is where, depending on how good you are to him, whether he knows you or not, right? So where does China fit into all this then? So rumor has it, because the number is not out yet, rumor has it that China's tariff rate is roughly about 55%. 55%. So it seems to be about right, right? Because obviously they don't like China, right? So must be about 5, it must be a 5 handle and then something, okay? So roughly about 55%, which seems about right because Brazil is about 50. Okay, so more importantly, what does that mean for manufacturers and for the industry in China? In my opinion, right, I don't think anything will change much. Because once again, like I said, right, only 2.5% of Chinese economy comes from US exports. And if they are still here after 8 years, probably nothing will change. And also because if you look at this tariff, right, it's the relative tariff that is important. So let's say you are a manufacturer in China, being tariffed at 55%. Would you move to Thailand if the tariff rate is 36? Would you move to Vietnam if the tariff rate is 40? Right? Because everybody in the world will kena the tariff. You cannot run. It's only the relative tariff that is important. So in my opinion, because the relative tariff between China versus, let's say, ASEAN countries, which is in the region of about 40%, is not that great. So chances are, I don't think there will be major movements in terms of the exporters. Okay? With that, I've come to the end of my presentation, and I'll hand it over to the moderator. Have a wonderful afternoon. It's been great. Thank you very much, everybody. Thank you.